All right, good afternoon, everyone. Thank you for taking the time out of your busy day to stop and visit with us this afternoon here at the Infinity Polaris Trading Group webinar. And I want to thank Patrick and the folks over at Infinity for certainly hosting this for us. And we have a great relationship with them, and they're a class act outfit. So I want to thank them right from the outset. As Patrick said in the beginning, as the lead-in, the day in the life of a Polaris trader. This got me just to thinking a minute or two ago when Patrick was referencing it. That I don't know how many of you, or perhaps your children, when they're in school, they have the career day, and so people come in from various walks of life and so forth to make presentations to classrooms. So it got me to thinking that, learning to be a trader, what better place to go, whether it's here or at a career type event, to ask questions of a trader, find out what exactly they do during the day. All right. A lot of people have misconceptions out there that that you walk in and you put some money in an account, and before you know it, you're super trader down the line. Uh, there's a lot of misnomers out there about how easy it is to be a trader, especially if you're coming from a different walk of life. So what I found is, early in what I wanted to do to become a trader in my career years ago, I went down to the exchange. I spoke to traders, spoke to specialists. I spoke to anybody that I could when in my early days, when I was a teenager, and so forth, trying to find out, what it is about trading that makes them do what they want to do. So if you wanted to be a police officer, or you wanted to be a nurse, or if you wanted to be a scientist or an astronaut, okay, you really need to kind of do some research and find out what actually is to be an astronaut. Well, it must be cool flying up, in those jets and those rockets, but not everybody can attain the astronaut status, all right, but they all strive for that. So what is it that it does it take? All right, it takes a lot of hard work. It takes commitment. All right, and our traders in the Polaris Trading Group realize that, and they know what it takes to be a success. And again, simply, it's not easy. So what we wanted to try to do today was give you a glimpse, an insight. All right, hopefully a intriguing insight into what does it take, and what do we do at Polaris Trading Group to work to become successful traders. Okay, we'll also touch upon today a tool that we've recently created this past year, called our Auto Trade Assistant. So it is an auto trader, but it is based upon a specific setup that we engage in on a day-to-day basis through our methodology. Okay, so let's just move ahead. Again, Patrick did mention disclaimers. Just one additional note that Polaris Trading Group offers services and products for educational purposes on a subscription basis. All right, and neither PTG or principals are licensed brokers or advisors. So becoming a member in trading here at Polaris Trading Group, any of these lessons or strategy presumes you have read the disclaimers down below. So past performance, of course, is not indicative of future results. All right, so to give you a little background about who I am, where did I come from, and so forth. I've been trading for 30 years at the investment banks and at various hedge funds, and now I'm currently an independent trader and educator. Some of the places I've worked over the years of Shearson Lehman Brothers, United Bank Switzerland, and a few high-frequency hedge funds. During my time at the investment banks, I was essentially a market maker enlisted in NASDAQ stocks. So I was that market maker making bids and offerings all day long, maintaining an orderly market, and on behalf of institutional accounts as well as retail accounts. Along with that, I learned many different styles of trading. I've traded index futures and various derivative products, and I learned quite a bit about portfolio risk management. And the key to this is risk management. So as a trader, I think one of the important competencies that you need to develop is a skill of risk management. All right. So I want to make sure that we teach our traders the skill of risk management through what we do on a day-to-day basis. Okay. At Polaris, I just want to give you a four-mission outline of what we do. And from the start, one of my main objectives for our students and our traders is to improve their decision-making skills. All right, to become more competent in reading the market's action and to improve their skill ability to make decisions in a fast-paced environment. All right. Many of you have come to me, many of our students have come, and perhaps many of you out there have some habits that you're looking to change, break. Okay. What I try to do is I try to teach our members empowering habits and try to help them rid themselves of the old bad habits that they just fall into the same trap over and over and over again. But in doing so, we have to learn a new way to read the markets. Okay, there's many different styles of trading out there, so there's a variety of different approaches to come to similar conclusions. But one thing that I want to always try to do, and it's paramount, is as a market maker over the years, I've learned the inside, the workings of the market, the hows. How does it work? How does it function? How do the players perform day to day? Institutional accounts, day traders, and so forth. How do they interact? What's the kind of the engine underneath the hood? So what I try to do with our members is demystify the market's action. All right, and by doing so, I kind of pull that veil off and say, okay, guys, here's what happens. This is how it functions. This is what we're looking for, etc., etc. By doing so, I believe that there's, people kind of think about traders as, various groups, retail traders, professional traders, hedge funds, portfolio managers, and so forth. And most people say, well, only 97% of the professionals win and 3% or so of retail traders lose and so forth. I don't look at them as retail or professional. I look at the marketplace and the players in it as there's two groups. There's the informed group and the uninformed group. Now, I'm not talking about insider trading type of knowledge ahead of time. What I'm talking about is really understanding how the markets function. And it does not matter how much money you have. Okay, and this is a critical point, because though having a well-funded account is important, just because you have a lot of money to trade with, all right, does not mean you're a smart trader. Okay, so bear that in mind. As a smaller account size that many of us are, it's the knowledge that you have and how you implement that knowledge that matters. So you want to be an informed trader, not an uninformed trader. Okay, so that's the four core parts of my mission that I try to attempt to convey on a day-to-day basis through my day-to-day teachings, the education, and as well as the software that we've created. All right, so let's just give you an outline of what a typical day is for a Polaris trader in our group. Now, this is just a text outline, but I will start showing some charts and slides and so forth, and which will kind of coalesce what you're seeing here in text, because visuals are much more powerful than text. But as an outline, I begin every morning writing a daily trade strategy. So what that simply means is it's our daily trade plan. All the key levels in a couple scenarios, a bullish and a bearish scenario that begins every day. Now, you got to ask yourself, do you actually sit there in the morning and devise a trade plan, or do you come in at 5-10 minutes before the cash opening and sit down and say, okay, I'm ready to trade, let's go? Many people do, and they're unprepared. All right, I will say to you here and now that professional traders, hedge funds, money managers, investment banks, all right, the big boys out there, they are well prepared. They are at their trading desks late in the day. They're there early in the morning, prepared. It's a very competitive business. There's a lot of information worldwide that circulates now. Yeah, it's more important. It's more important now, I suppose, than any other time, perhaps, to be as informed and well prepared as possible. But if you're just coming to the game, sitting down, think you're gonna, throw on a couple trades, you're sadly mistaken. So the truth of it is, it's hard work, it's preparation, but the well prepared trader, all right, has an edge. So think about a sports team, right? If those playing the Super Bowl or day-to-day Sunday, ball, if they're not prepared during the week for their competitor, all right, when they come to that game day, what type of edge and chance do they have to really win? All right. Now that doesn't mean that even if you're really well prepared that you're going to win, but it is a core component of what is necessary. All right. So bear that in mind. Our pre-market briefing. So let me just pull this chart in for a moment, or this email. So this daily trade strategy that I send out to everybody. Hopefully you'll see a copy of it in here. Yeah, it looks like you do. So I send this out to everybody on our distribution list, pre-opening, and it simply reviews the market from what's happened perhaps overnight, because we do review what's happened in the overnight, the Asian market, Europe, etc. We need to know what's happened over there. Kind of that's the preview of what may happen here in the United States on our cash market. We certainly want to know what is important in terms of calendar announcements, economic announcements. So I provide a calendar for everybody, right? And the important announcements that are the releases for that particular day. And then I go into what I write, and I write this freehand. I'm up about 5 a.m. every morning, right, preparing for a 9:30 opening. Okay, and again, this is typical of what I do. Day in the life, right? So what I do is I write out freehand. I take a look at the markets, all right, overnight. I see what's happening, what key levels, and we'll get to some of the charts that I view to help prepare this particular daily trade strategy for our members and subscribers. And we deal with various cycles, but today was cycle day 1. So we were expecting today, as an example, we were looking for a normal spill down. Okay, and we actually got that. All right. Now, I don't make any predictions in this particular report. You're not going to read any hyperbole about where I think the market is going. But it's, we don't. One of the phrases that I use with our members is, we prepare, we don't predict. Okay, but in that preparation, it is very powerful. The next section here that everybody really needs to focus in on is what are the range projections for the day. Now again, these are not predictions but projections. Okay, and once again, if you don't have or armed with this information, you are at a severe disadvantage, because I can assure you the folks over at the large investment banks or hedge funds and money managers know these levels. Okay, and our members can attest to the validity of the levels that I present on a day-to-day basis. So if you're unprepared, if you don't have these, all right, you're, as they say, SOL. Okay, so I provide these on a day-to-day basis for everybody. All right, as a short reference. Now the charts highlight these in much more detail, but this is kind of a summary basis. And then what I do in the next section here, I'll show you the chart. I'm not going to click it. I'll actually bring it in. All right, again, remember, this is a day in the life. How do we begin our day? So here is a chart that I provide everybody. And it outlines, it's a 60-minute, 24-hour chart, and it outlines our key levels, range projections, all right, and cycle and particular levels. So everybody gets a copy of this as embedded into the email on our daily trade strategy every day. Again, very important component of what we do on a day-to-day basis. Okay. Again, it's all about preparation. It's not about knowing where the market's going to go, but prepared for any eventuality to the upside or to the downside. Okay. As a day trader, as a trader in general, you should be flexible to trade both sides of the market, short or long. All right. You should not necessarily have a particular bias, though you may be more inclined to trade from a particular side. If you feel much more comfortable trading from the long side, then those days that have up moves in them, you'll probably do better than you will on days that don't. Okay, so everybody, not everybody's the same. All right, and there's a lot of room for profitability and success, trading, and you have to find what your little niche is. Okay, but one last thing about this is I run up two scenarios. One is a bullish scenario, one is a bearish scenario. And again, no predictions, but rather just outlining that if an event occurs, then the probabilities favor residual momentum to the upside. This was today's in scenario 2, which again we were anticipating a down pressured market today. And so what we wrote here in scenario 2 is failure to convert the prior high opens the door to test the 1912 central pivot. And that's exactly what happened today. All right, so looking back, somebody says, wow, you made a great call. No, I didn't make a great call. It's just what the scenarios outlined and what the key levels showed us. Okay, and so what we do is we package it in a way where hopefully it's easy to understand. I think it is for our subscribers. And this is our game plan. So again, it's really important that you start with that type of beginning of the day. And again, if you have not for yourself, you're not prepared. All right. All right. So a couple other points here is as the day begins. What's the 9:30? Once we finish our our morning briefing, which by it starts at 9:15, and we do a little bit of kind of fine tuning and whatnot before the cash open. And then as the day unfolds, we have an opening range sequence that we look for, and in which case offers us our initial bull bear line in the sand, so to speak, all right, of what we look for. And again, I'll show an example of that today, of how that unfolded for us today. And then we look for our first hourly high-low range. Once that first hourly high-low range is in place, that sets the tone for the remainder of the day. Simply because the large institutions, many of them don't actually begin to enter orders into the marketplace until the first hour. So that's 9:30 Central, 10:30 Eastern Time. And once that first initial balance zone is in place, then then they start filtering their orders throughout the day. So one of the key things of what we want to try to do on a day-to-day basis is, what type of day is it? Is it a trend day developing, or is it a non-trend day developing? All right. Do you know how to determine whether it's a trend day or a non-trend day? Okay. If you don't, we will teach you, right, how to build that competency, that skill to identify that. Right. Today happened to have been a non-trend day, and we commented about that very early, and as it turned out, that's how the day unfolded. But again, don't know this in advance, just making some assumptions, some inferences, right? Very similar to, a scientist. A scientist, wants to develop an experiment. Well, before they develop an experiment, they have to have some set of assumptions of what they're looking for, all right? And then they created an experiment to prove or disprove various assumptions. So we make assumptions every day. Some people call them biases, opinions, whatever you want to call it, but you make some sort of an assumption, and you see if the market is is fulfilling those particular assumptions that you've made. If not, then that's market feedback and information. So we need to also understand, it's not what we want the market to do, but rather, this is what the market is doing. And how do we respond as a trader, right, to what the market information is giving us? Okay, these are all skills that you must develop. I can assure you, professionals that have been around for years are well honed in this. If you're relatively new or intermediate, trader, again, there's always something to develop. There's always something to learn. All right, we'll try to extend what I can with my knowledge and experience, to everybody. All right. Now we have some software, and we'll get to that. And I'd like to do a couple demonstrations if we have time, and I think we will. We have a couple pieces of software, a Scanalyzer. Right, this is a custom made particular piece of software on the Sierra Chart platform. And here's a view of it. It's called the Scanalyzer dashboard. And simply what this does is, if you're trading multiple instruments, all right, this allows you to simply monitor the market, okay, for signals. Let the computer, let the technology do the work for us. All right. I don't sit in front of the screen, although I am in front of the screen, great portion of the day. I'm not glued to every tick, because if you do, you will simply exhaust yourself. All right. But rather, what we want to do is we want to have the computer develop, scan for us. Hey, take a look at this signal. Take a look at that signal. And so we've developed some software for our members to help us. Okay, it's all integrated in the Sierra Chart platform. Very seamless. All right, very powerful. Very easy to monitor. Okay, so we have that on another screen that we monitor that. What we want to also talk about today is our tool that we use to help our traders auto execute, okay, our trade setups. Now, over the years, having spoken to hundreds, if not thousands, of traders, one of the key elements is fear of loss in taking a trade. So, of course, that's a natural, human reaction, all right, and response to stressful situations such as fear of loss. The problem is with that is that people, when they're fearful, they hesitate to pull the trigger. They know how to trade, in a sense. They know what they need to do, but they fail to execute on what needs to be done. So having realized that, and again, the genesis of this auto trade also has been as a educator, moderator, trader in front of a group, that I come across a numerous amount of distractions for myself during the day. So the genesis of this auto trade assistant, and again, the operative word there being an assistant, is that it helps me execute when when I can't manually pull the trigger. I know what I want to do. We want to be a buyer today. We want to be a seller today. Now what I've done is I've created an algorithm that taps into the power of Sierra Chart's execution platform and helps us execute our trades much more efficiently than ever possible. Okay, and so what this does is this helps kind of level a playing field for that particular trader that's having a difficult time in a very fast chaotic environment. All right, let's face it, the volatility that we've experienced the past 5 weeks, we've had average daily ranges upwards to 40 handles a day, and we would have literally 15 handle moves in a matter of minutes. Okay, years back, it would take days for the market to move 30 handles. Today, with the onset of these high frequency algorithms, it's moving in minutes. Okay, so how do you you say to yourself, how can I compete against that? All right, with that type of speed and so forth. Well, it's tough. I will admit it's tough, but we have to then tap into the power of the computers today. So what we've done here is we created our own algorithm, all right, to help us do that. All right. Okay, so before I get to the specifics about the auto trade, which is kind of more the demonstration, I want to just circle back one last time, and I want to show you some of the charts that we use as part of our chart book in Sierra, and how we prepare, how I prepare in the morning, how our members take a look, and we use various tools. Okay, the PTG methodology is really an amalgam of multiple disciplines, such as market profile, volume analysis, price action. There's some Fibonacci stuff, filtered in, with what we do. Okay, it's really an amalgam of a lot of different things. And I tried to, I think the methodology and how we present it and how our traders get out of it is an easy approach, an easy to learn approach. Okay, and many of you out there have already know quite a bit about market profile from various courses that you've taken, or educators that you've come across and so forth. So I'm not necessarily a market profile educator per se, but we do use it, and if anybody has questions about it, throughout the course of the session or so forth, we reference the profiles, quite a bit. Okay, they act more as a planning tool for us, and help outline how the distribution and volume or the structure is unfolding. So in the Sierra chart version here, you'll see it says day session and evening session split into two profiles. All right, this is a great way of, I really like this profile, the way it's outlined. You have the traditional market profile letter configuration, and I also have the volume configuration in the light gray, all right, opposing it. And so what I do every morning coming in, I take a look, okay, where has the overnight trade occurred in Globex? Okay, so this is today's here, so the one far on the right is the cash session today, and the one right in the middle here is the overnight session. All right, so what I do every morning is I come in and I just take a look, and then many times I'll just split out the profile. All right, again, this is all pre-configured for everybody. All right, so there's no programming skills that you need to figure this out. All right, and so I go in and say, all right, so what's the range been, high, low, where's been the concentration of volume, et cetera, et cetera. I make some notes about that. All right, was the overnight price action able to take out the prior session's high, prior session's low? Is it within the context of the prior cash session? Again, make notes about key levels. All right, so you can see here there were several touches of the 25s, okay, in the overnight. So the low bars here, low time periods, the 25s, okay, and then the high volume node for the period up around the 2750s. So that becomes an important level for us to take a look, all right, as part of unfolding, as the cash session begins. We need to know what happened. Remember, these are like, we call these the Europeans, right? Or for short, Peons. This is really what the Europeans have done. So are the Europeans, more likely to be long, short? What price points are they more likely have traded heavily at? And that becomes a marker. So that becomes this high volume node here. What was the range? What did they try to do in the overnight? Right? Did they try to push it higher, push it lower? How far were they able to go? These are all questions that, again, part of the preparation process. All right. And then as the day unfolds, we have, of course, a period here, the opening range, and etc. So as the day unfolds, I have this on another screen, and I can see kind of the makeup of, they tried to push here early in the opening. All right, they failed to push. This was what's called a fail to push. All right, and as a fail to push sets up a reversal. All right, so we were actually looking for shorts today early on. Right? It was kind of congested a little bit early, but we were looking for shorts primarily. And again, having the day type of what we were looking for to begin with on a particular cycle day that we look for, in which today was cycle day 1, which is anticipated a decline. This all actually fell right into a nice configuration for us. Okay, but again, no predictions involved. All right, but a lot of preparation. All right, and again, many of you, we have a lot of members in our trading room that comment about the market profile and specific levels. All right, and there's a lot of great interaction. So you're not just necessarily learning from me, but we all learn together and we all collaborate, and it becomes a great community of what we do. All right, and that's what I'm trying to build. I'm not here to just be like a professor in a classroom situation, all right, but rather to impart on our members my years of background. Let's trade together. Okay, and again, we trade together and we trade live and warts and all. All right, so on the next slide here, on the next chart, what I do is I take it down a notch from our market profile. Now, don't get overwhelmed by the amount of levels and price points here. All right, the algorithms that we've built into our software generate mathematically generated levels that I have created and taken with me from my years. I've converted it from my years when I was at the investment banks as a market maker. So every day, whether I'm trading an individual stock or the overall market, I knew what the average range for a particular stock was. All right. So do you know what the average range of a particular index is if you're trading an index or gold or silver? Do you know what the average range is? If you don't, you're at a disadvantage. You're disadvantaging yourself. So that's something that you really need to know. Okay. And our software automatically generates all of this. But what we have done as well, which is a real great service for all our members in the public. If you go onto the website, which is PolarisTradingGroup.com, in the website there is a spreadsheet that we offer to the public free every day, and basically it is the average true range calculation web spreadsheet for us. Okay, for S&P, crude oil, Nasdaq, Russell, and YM. And it's a 10-day average true range, and then we calculate bullish and bearish targets based upon that. Okay, so that's available for everybody free. All right, so feel free to explore that on a daily basis. That is updated live, real time. And you can see here in the top right hand and the bottom right hand, these are the same levels that are auto-generated for our software. And then, so this is the next kind of level, what we begin every day pre-market. We want to make sure our traders are well prepared, not even well prepared, best prepared, all right, as they possibly can. What are the key levels, and et cetera, et cetera. And again, we were talking about the 1912s in the daily trade strategy. And again, all written before the opening, and the 1912s, as you can see here, 1912-50s, became a very, very important location. All right, you'll see from the history that many of these levels, all right, were achieved, all right, during either the overnight or the cash session. And again, this particular chart is a very, very important chart for us. And again, you will learn how to interpret it. All right, I teach everybody all the the ins and outs and the nuances, and I guide everybody. All right, so it's not, it looks like, oh my God, it's overwhelming. It really isn't. Okay, once you get some of the basics down, it flows pretty easily. Okay, and then simply a 5-minute chart. Again, a variety of levels as well on that, but now we're dealing with the cash session only. And so the cash session has a specific number of important levels that we want to highlight. One of them, as I mentioned earlier, was the opening range price. Okay, so you'll see here on the labeling, and again, Sierra Chart does a fantastic job, All right, and Patrick has taught me quite a number of things, to do with Sierra over the past few years, and the more I have worked with Sierra, I just absolutely love it. All right, it's lightweight, it's very powerful, and there's so many good things about it. But one of the things I really like is the labeling. All right, you have all these lines. Well, what the hell do they mean? Okay, well, I label them for all our members, okay? And again, this is all part of our package. You need not do anything. So I've done all the hard work on programming all this stuff and labeling it. But one of the things we look at, again, as the day unfolds, again, day in the life, right? So as the day unfolds, once we've gotten all that preparatory work behind us and we know what key levels to look for, now it comes time to where the rubber meets the road. All right, preparation is one thing. Now let's get to the meat and potatoes and the execution part of everything. Hopefully the fun part. All right, all that work. Let's see if we can make some money for ourselves. All right, and see how successful we can be. So one of the first things we look at, cash opening. Where is the cash opening relative to the prior range? Is it above, below, inside? Again, all right, take some notes, and you'll be able to ask questions of this on your own on a day-to-day basis. Second thing we look at, the opening range rotation midpoint. That simply is the 5-minute midpoint. Now, when I was a market maker years back, okay, this was the most important number that I needed to know on a day-to-day basis on an individual stock, or whether it was the broad market as a whole. And and I've highlighted it in cyan, and I've made it a little thicker for importance, is that is our initial, what we call our bull-bear line in the sand. Okay, bullish above, bearish below. It's one thing for the price to open at one price, but the 5-minute average is just that first 5-minute bar. All right, taking all the trades on it. All right, and averages and gives it what the median point is, or the midpoint. And that becomes the key reference every single day. And it becomes a very important reference every single day. All right. Now, what we do here is, again, it was kind of choppy in the morning early, but we kept seeing price try to auction up past that 24 level, and it kept failing. All right. So we knew that price was not able to get past the prior day's high. And now in the opening sequence, right, within that first hour, prices were not able to get above that opening range. So this sets the stage for further weakness as the day unfolds. If the bulls, right, if the buyers could not get price above that opening range average here and keep it above, then that becomes a sign of weakness. All right. And so you need to, be on the alert and looking out for those signs of weakness or strength. All right. Today we were looking, for what happens around that opening range. Okay. And then of course we had the oil numbers today, which kind of helped, force price down a little bit. But it really set the stage even before the oil report. The stage was set for some consolidation and some weakness as the day unfolded. So that first key level is important, and then after that first hour, we talked about the initial balance. Okay, now I also mark in white here. It says IBMP, initial balance midpoint. So that's the first hourly midpoint. All right, again, very important. Now a lot of people, follow the VWAP. Okay, the daily VWAP or the 24-hour VWAP, yes, it's a very important number, right? We follow it as well. But structurally, if price can't get above a level or below a level, right, regardless of the volume-weighted price, if it can't get above or below a specific midpoint of a range, that shows you either weakness or strength. So again, today, the prevailing weakness was maintained after the first hour. So as you can see here, an attempt to get back up through the hourly midpoint a couple times, all right, only set the stage for declines. All right. Now, having some knowledge about what to be looking for gives you the edge. Knowledge is an edge. Right? A piece of software is not your edge. All right? A fancy dancy indicator is not your edge. Your edge is knowledge. All right? It's conceptual knowledge. In other words, if price does not get above a specific point, that indicates some weakness. All right? Now, it's at that point, what do we do with that information? Information is just information. If information is not used properly, all right, then it's just wasted information. So we want to use that information to develop a cohesive type trade opportunity plan, all right, to benefit from all that analysis that we've done. All right. I always kind of say to our traders, do you want to be an analyst or do you want to be a trader? All right. Well, there's a certain amount of analytical competencies that you must maintain, but once you have that, okay, once you have that, then you can turn it into where's my edge? Okay. So now this is where we're going to get to in terms of the auto trade. Okay. Let me see if I can get back to my PowerPoint. All right, we did that. Okay, so hopefully this will be the fun part. We'll do a couple examples here using the replay feature on Sierra Chart, and I'll show you a couple of trades that we did today live in our room, and then we'll see if we can replicate a couple of them. On the auto trade, again, basically features and highlights. And again, this is a tool that I mentioned that we created to help our members execute automatedly. Now, one key thing here is it's not a black box. All right, this isn't a set and forget tool. It's a tool that will help, and it's an extremely big help. All right, especially for those traders out there that are having a difficult time, pulling that trigger, that proverbial trigger. All right, because of various reasons. But this particular tool has features in it that the large institutions, remember my background is from the institutions, from the investment banks, and I have a very strong statistical background of how I trade. Okay, so one of the key features of this particular tool is a position sizing algorithm. So why is that important? It keeps risk uniform, okay, across multiple trades. In other words, if you put in a particular trade, I want to risk X amount, $200, $300, $400, whatever it may be, per trade. I do not want to exceed that level. All right, and I want to position size myself to the maximum amount of number of contracts as possible for a given risk level. So this particular tool will do that automatically for us. Again, all this is done automatically. The risk is defined by either a percentage of your account size or a specific dollar amount. Either way is acceptable, doesn't matter. But there's features for both. All right. Now the entry, and again, we're going to show this, we're going to demonstrate this, and you'll see. So this is just the outline. It's auto executed based on a specific market structure criteria. So the algorithm that we've created for this is based upon our signature premium and discount setups, which is based upon what we call our CCI crossover system. We use the commodity channel index in a very unique way to execute our trades, okay, and look for setups. The stop loss, again, very important, right? We should always, anytime you enter a marketplace, you should always have a stop loss in place. Do not ever enter a trade without a stop loss somewhere, even if it's a disaster type stop. A number of points away from your entry, you got to have it. You got to protect your account at all costs, all right? But you don't want your stop loss necessarily so tight that just market noise will stop you out, right? There needs to be a reasonable point. But basically, the 1 hour value or one risk unit value is determined automatically through the algorithm as well. And now entries, stops are important, but what about the targets? how do we, determine our targets? Now, there are many ways to determine targets. Some people, just randomly will place, all right, I want to sell it here or buy it there. Some will use Fibonacci, type levels and whatnot. We simply use our values. All right. So if, for instance, as an example here, if you're risking $200 maximum risk per trade, okay, the risk-free level is $200. All right, that's our target number one, basically, or it's the risk-free levels we call it. Simply is that if you say, for instance, bought 2 contracts for a 2-point stop loss, then a 2-point gain is equivalent to the initial stop loss. So that's the 1R value or risk-free unit. And then the target 1, 2, and 3 are based upon R multiples of your initial risk. All right. Now the beauty of this particular tool, it's flexible whether you're trading a single contract or if you're a multiple contract type trader. All right. So have no fear. All right. It's useful for if you're a small trader or a large type of trader or intermediate or anywhere in between. Okay. So now what I want to get to is we're about 45 minutes into the presentation, and this gives us a good opportunity to just highlight a couple of the trades that we took today, and this is a snapshot of it. I took a snapshot live, and these were live trades in our trading account here with Infinity. Okay, I do everything live, by the way, in our trading room. All right, there are a lot of people out there that do simulated trading and so forth. Everything that I do is live. Now, again, past performance, of course, is not indicative of future results, and et cetera, et cetera. But I demonstrate to our membership and our guests that visit with us, what we do live. Okay, and so that means you're going to see losses. All right, you're going to see me take losses. You're going to see me take gains. You're going to see me manage a trade. All right. When I got first in the business years back, 30 years or so ago, okay, I sat by a trader for nearly 5 years before I could earn a trading account. Right. Today, you can just call up a broker, fill up some, Homeland Security questions and so forth, and deposit a check, and you're trading alongside the best traders in the world. All right, that's a scary thought without any real training. Years back, it took me almost 5 years to learn and to have those people that were giving me money, all right, to trade, the confidence. Okay, so it's important that you seek out competent guidance, all right, wherever you can. So one of the things that I've committed to my members is that I will show them, winning trades, losing trades, warts and all. Okay, this is real life. This isn't, Memorex. Okay, and I think our members, I know, appreciate that. All right, so today we had a few trades. We ended up having a nice little positive day. We have a proxy $10,000 account that we use. Now, I've been told that some people out there, they trade big size, right? And what I try to do is to demonstrate is most of our members are 1, 2, 3 contract size traders. So what I'm doing is running an account that basically mimics or emulates what most of all our membership will be trading, right? 1 contract at a time, 2 contracts, buy one, buy another one, sell one, scale it out, and so forth. All right, get stopped out, etc. So what we're trying to do is, and our goal on a day-to-day basis is to try to, net out about 2% a day. So it's about a couple $100 a day what we're shooting for. That's a reasonable goal, right? Not always achievable. But on average, that's our longer term type goal. Okay, so all our settings and everything for the indicators and everything, I cannot disclose those today, but they're all in the membership, right? All our members get all the transparency in terms of what settings are. But here are the 2 trades, and what we want to do here is this is just simply a static snapshot. But what I want to do is I want to go to the charts and I want to demonstrate one of these trade setups here through our auto trade and see particularly how it unfolds, and you can see how it works in real time. So what we're going to do here is what you basically see. Let me just explain what you're seeing here a little bit first. Is we're looking to a premium, all right, is a short sell, and a discount, all right, is a long purchase. Okay. What we want to do in terms of a premium is a premium by definition, and as I teach it, is strength. Now, a premium simply means that price has gone higher from a lower level, all right, and the CCI indicator here becomes what we call, gets into our premium territory. So it gets into a zone where we're looking to take a short sell trade, all right, but a premium has to be in weakening conditions. All right, larger degree weakening conditions. So how do we determine that? We have what we call our fair value zone, and this is the shaded zone in here that you see. Okay, and again, all this is laid out for our members and our membership. I mean, in very good detail. But we want to sell premium, or we want to sell short when prices bounced within the context of a downtrend. All right, makes sense? Everybody knows that that's what they want to do. The problem is a lot of people don't know how and when to do it. What our particular crossover system does, it identifies the statistical spot from which the reward risk of a potential trade is at its at least best, all right, at a moment in time. All right, and so the algorithm that I've created picks that up. All right, now again, it does not always have a winning trade, but it picks it up, fairly well. And either the trader can decide to do a manual execution, or he can use, or she can use the auto trade assistant, what we call the ATA. And so up at the top here, you see a status box. Now it's currently disabled on this, but we're risking a certain amount of money per trade, and so our proxy number is $200, and we have certain style trades in the entry. Typically, our entry is a stop buy or a stop sell to enter. Okay, so the entry is pre-staged at a specific price, and when price crosses through that, it automatically executes. All right, now it will automatically position size and then scale out. So you can see this particular trade here we shorted today at 1916. We just sold one contract. Okay, sold one at 1916, and we covered it back here at 1912.50. So about 3.5 points. Now a lot of people ask, it's difficult to trade one contract, right? Well, it is primarily, but we try to get at least two, all right, on a position. But look, if you're a one contract trader, there is still ways of trading a single contract until you're able to build up enough to, in your account and profitability to move on to the second contract. This is what I try to teach and show and demonstrate to help our members, reach their individual goals. Okay, so in this particular sequence here that we did, this was a winning one here, and then we had another winning one, but it was only a partial winner. We bought a discount at 20.5. Here we got partially risk-free, so you can see sold one at 22.25. Again, all automatically. And then the second one here, price did not go any further and got stopped out. Okay, so we have what's called an auto break-even feature in our tool as well. All right, it's something that our members really, really wanted, they liked, and I thought it was a great idea during the development process, and it's there to protect, your capital. All right, so you don't want a winner turning into a loser. So I'd rather get stopped out for break even. All right, I can always go back in, as I say to our members. You can always re-enter the trade, but what you can't do is you can't get that profit back once it's there, and then you give it away. All right, so we want to protect the profits. And that's how you build your accounts. Small singles, doubles, singles, a lot of singles, a lot of bunts, all right, for that matter. Okay, a lot of bunts. All right, so with that, let me just get to, I'm going to do this example. This particular setup in the middle here, this was a discount, all right, a pullback within the context of this uptrend. And I'm going to just show a quick demonstration of this, all right, on our charts. So if I can, let's see if I can get to the chart properly here. Okay, so let me switch to the execution chart. And I think we have it near set up over here. So here it is during the day, all right, and we're just going to do one demonstration here because we don't have too much time left over. But what we're going to do is I'm going to show you a demonstration of this particular discount right here in the middle and how the auto trade works. So I don't know if anybody is familiar with the replay feature on Sierra Chart, but it is really, really good. It's a great learning tool. So what we're going to do is we're going to move the chart over just a few, all right, right about here, and we'll set up the replay. So I'm just going to go right-click replay chart. Okay, and again, you'll see here a little replay box. And what I'm going to do is I'm going to start the replay. All right, you can just start the simulation. And then once the simulation is begun, I'm going to enable, all right, so I'm just simply on one speed. Now I'm going to enable our auto trade. So simply to do that, to turn on the algorithm up here, is we want to look to buy only, all right, in this particular example, in this particular case. So we want to buy only. We're going to accept the terms of the auto trade disclaimer. And now it is live. All right, and now what I'm going to do is I'm going to increase the speed for brevity here, and I'll explain as we go along, all right, as this unfolds. So again, what we do is we had a shift in the market, a bullish shift, and I'll describe that here. All right, price put in a low, bullish shift. Now we're looking to buy a pullback. And you can see here, let me just pause it quickly. Now you're seeing a white alert bar. Now this alert bar is giving us a signal. You can see the indicator down here is giving us a signal that there's a potential buy spot developing at this location. All right, so let's continue on. There it is. All right, so let me just pause this quickly. Now what we've done here is I set it for a $400 max dollar risk per trade for our example. Again, past performance not indicative of future results, etc. This is a winning trade. Again, I will state very emphatically that not all of these play out as winners. All right, so our members know that, and again, that's part of the process. But I do want to show you, just for demonstration purposes, how it actually unfolds. Is once the alert bar is and the criteria is valid, all right, it will automatically stage an order through the Sierra Chart platform. All right, very seamless. All right, automatic. You don't have to do anything. It will automatically place your stop and then your exit orders based upon certain parameters that you've outlined. Okay, in the input setting. Very easy to configure. I have everything laid out for our members very easily. So let me increase the speed a little bit, folks. All right, so we can get, we could be here 15 minutes just waiting for it. So I'm going to increase our speed. But this is a great learning tool, by the way, all right, for our members. And if you've never used the replay feature in Sierra, I think that's one of the most underutilized tools out there. If you haven't used it, I use it every week. All right, whether it's simple demonstration, okay, or not. All right, but I think our members really get tremendous use out of it. Okay, we just sold one here at the risk-free level. So let me pause. All right, I guess the Infinity was updating there. We sold partial contracts at the risk-free level. Now, what happens here is once we make a sale at the risk-free level, the original stop loss, which is underneath the low part of the pivot, right, moves automatically to auto break even. So as I mentioned to you in the static snapshot a few minutes ago, that we want to protect our capital. I'm going to walk away. Once I get to the risk-free level, I am walking away with a profit of some sort, all right, on this particular trade. All right, so I want to make sure that I'm able to protect that, and so we have an auto break-even feature. Now, what we really want to do, of course, is get higher prices. All right, so I believe this does ultimately move a little bit higher. And what you can do is, for those of you that ever use the auto trade features or just the chart trader features of Sierra, is you can move your stop, all right, just simply by dragging the line. Okay, it doesn't have to stay there. You can move your targets, okay, just by dragging the line. I find that very convenient, all right, very powerful. All right, so just to speed it up a little bit more. Now, what will happen here is if a new trade setup develops, such as you're seeing now, there's a new setup here. Let me just quickly pause this. There's a new setup here saying, here's a new one, buy 4 units at 20.5. Well, we're already in a trade from lower. So if you're already in a trade from lower, it will not execute a new trade. There's no like pyramiding like that. You have to be, the way the algorithm works, you have to be flat positioned to take the next trade. But if you are in an existing trade, then although this may be valid, it won't automatically take that trade. Okay. So I do think this gets up to that 21.5, and then again, what you can do here, as I said, using the management features, all right, is to keep trailing stops. So right now, like I'm going to move my stop up here. There, we sold one there, and then what you can do is to finish this off, I'll move it up to this 20 level, all right, and as you can see here, we just got stopped out on the balance. Okay, so there we go. So that's how the auto trade works. Okay, and again, this is a winner. This is just for demonstration how the functionality of the auto trade works. Now, if you find that you have difficulty pulling that trigger, or you're hesitating, or you're trying to get, I want to get this price, or I want to get that price, simply the algorithm is designed to identify a valid pivot, okay, location. And then once that valid pivot is identified, it will execute the trade. It will predetermine your risk. And now there's no guarantee, of course, that you're going to get risk-free or make, or hit target 1 or target 2 or etc. The market has to, generate, that opportunity for us. But once we are in a trade, we can manage it effectively. All right, and right now we have what's called the auto break-even feature. In a future update for the algorithm, we're going to have an auto trailing feature. So when you get these trend days that we're in a particular setup, and we've gotten ourselves risk-free, and we've gotten to the auto break-even, but the market keeps moving higher, then we can turn on the auto trail feature and then just kind of simply use the ATR stop type methodology, which many of you are familiar with, and we can just trail it as far as the market wants to go. So we do have predetermined exit points based upon our value, and these obviously are very, very good trades, but the market will offer you the opportunities. Are you ready? When they say, when opportunity knocks, all right, do you answer the door? Okay. What I've done here for our members, and of course for myself in the genesis and the development of this, is I wanted to capture these trade setups as best as I can. Now, remember, all the prior analysis work that we spoke of that leads up to this, this is where the rubber meets the road. All that analysis work has already been done. All right, now when we unfold during the day, okay, all our members, we're all focused on the same thing. We're not talking about, Apple's, things going on right now with that company or some other company, but we're all focused on the same charts. We all use the same charts. Our members use the exact same charts that I show in the trading room. They're all pre-templated. All right, so there's absolutely nothing that that our membership, all right, needs to do. Okay, everything is again pre-designed for everybody. All right, so that concludes the demonstration portion here, guys, of the presentation. And again, as I mentioned, I've been using Sierra charts for a number of years now. Patrick has, again, really taught me a number of different things with it that have really enhanced the charts that we have. But it is our primary teaching software. If you've never used Sierra chart, you may be interested in taking a trial of it. All right, with Patrick, it's fantastic. We'll be offering a trial here in a moment, not only to our trading room but to the software. But light use, all right, built-in features, all right, profile and delta footprint. They call them number bars. All right, third-party vendors. You know what the costs are out there, all built in. All right, again, you simply cannot get the value and the power, all right? And one of the key components of what our members really like, and I think I know Patrick and the folks at Infinity, is with our relationship. I've been using Sierra charts for a number of years, okay? Everything is built in. I've customized our trading templates, our chart books, and again, I service all our members personally, all right? It does take some time, all right? It's a lot of work, but I find it very rewarding, and our members really like that. So to round it off, guys, for taking the time here, I want to invite you guys to a 14-day trial. Normally it's a 7-day trial. Come on in, kick the tires with us, see what we do, all right? If you're interested, we can set you up with a 14-day concurrent trial of the auto trade, the AT Sierra chart as well. Okay, so we can give you a demonstration there. There's the link. All right, if you want to go jot that down or put it into your browser and go in and sign up for a free trial, go right ahead. All right, I'll be looking for that. You'll get an auto reply, and we'll get you seamlessly set up into the trading room. And then again, the benefits that our members get on a day-to-day basis is you get all of what we've discussed. All right, this is a typical day in the life. I mean, it's a long day. We start from the beginning of the day, all right, at about 9:15 pre-opening, and we take a break at lunch. All right, we come back about 1:15, 1:30, and we trade the afternoon session. All right, our members are, as Patrick said from the outset, he's in the room. He sees what happens. Many of our members converse with one another. They add value to the membership. All right, so you're not sitting in there alone. You see everybody else, by the way. Okay, so for instance, you're in the webinar here today, but you do not see others that are attending the webinar. Okay, and that's a drawback for if you're using GoToWebinar, for instance, as a training tool. All right, the platform we use allows everybody to see one another, converse with one another, and it really makes our members really feel as though they're a piece of part of a community that is really there to help one another. All right. So again, I want to thank you for your attendance and again Patrick's support for this particular webinar. Guys, contact Patrick or your Infinity representative. And if you're new to this webinar and you're not an Infinity customer, all right, give Patrick a call. There's his information. You can email me with questions and inquiries at david@polaris.tradinggroup.com. Come visit the website, take that free trial, and see what we do. I think you'll enjoy what you see once you're there. All right. Thank you very much for your attendance, and that concludes this portion of my webinar. And we'll pass it back over to Patrick. Thanks very much, Patrick.